Hey guys, Dennis Wilburn, the Active Trend Trader. What do you do when the market is correcting, falling from the sky like it's not going to find a bottom, and you're waiting? We're going to cover several tips today on what steps and what actions you can be taking right now to be a better trader when this market decides it's going to turn around. This is Friday, January 21st, and it's never a good sign when the market closes at almost at its low on a Friday, and it's getting ugly, and we're just this close to being in bear territory. So strap on, let's get going with how to make money trading stocks. Aloha! Good afternoon, everybody. This is Dennis Wilburn, the Active Trend Trader. Thanks for joining us for how to make money trading stocks and options. As we said in the intro recording, we are basically going to be taking a look at what do you do when the market's starting to melt down. I've got Steve Ferrara and Anil Parikh on with us today. As usual, I know they're going to have some really great advice about what they do when the market is correcting the way it currently is. Good morning, gentlemen.
Good morning. Good morning. I'm sort of
Anil, you
my thoughts, and I didn't hear you.
Okay, Anil, you staying warm back there on the East Coast?
Yes, trying to. It's pretty cold.
And so,
That looks pretty heavy for indoors.
I know.
And so, let's get into today's session, and we'll just start jumping around. One is we want to basically start your weekly review with how to make money trading stocks. The market is in correction, basically, is the bottom line. I'll do basically a real quick overview of the indexes. But as we proceed on, I'm going to start with Steve. Steve, really quick, what's one tip you would give people to, with what you do when the market's correcting?
Well, I try to get into cash. I mean, what I could do better is participate in the downside. I tend to be a little bit slow to do that. Yeah.
Okay.
I'm generally a perpetual bull, and I trade the long side. I'm not so great at the short side.
Okay. Cool. So that's one of the things. What about you, Anil?
Same thing as what Steve said in general. Basically, I follow my system, and currently I have sell signal everywhere. Mm-hmm. So I'm sitting tight on my trading account now. In my all-weather portfolio, there also I'm sitting tight. I do absolutely nothing.
Okay. Now, what percentage in cash are you? Or are you letting things ride?
In the all-weather portfolio, I'm not touching it. It's about hardly any cash, but it's allocated into stock market and long-term.
Hello, traders. Welcome back. Sound check, please.
Short
1, 2, 3.
Treasuries and gold.
Okay.
For me, I'm all in cash.
All right. So I'm back in the office, and
are you hearing something?
For some reason, I believe that the shorts have to come out. Shorts have to come out of.
I am. Now, why that's feeding through, I have no idea. Let me see here.
I took this Amazon 29.7 strike.
Guys, if anybody's on,
is here for next week's expiration, but this will be a day trade.
Yeah.
And only because I'm.
Hold on just a second.
Today.
I will trade. What's that?
We got a twofer today, 2 for 1.
I guess. Maybe we should just listen to this guy. He may have some really good information there. I think he's gone away.
I'm seeing a business daily window. Is that from?
Yeah, that's mine, but I didn't have anything. That's just really weird. I didn't have anything. Basically was. Yeah, let me get rid of that. There we go. Maybe that was what was doing it. So yeah, guys, if you would put any comments or questions in the chat box, not the Q&A box, because I don't really pay attention to that. So with that said, let's
Can you hear me?
Yeah, I got you loud and clear.
Okay, but I cannot see myself, cannot hear. I don't know what happened. I might have to get out and rejoin, okay?
Okay, because we can both see you and hear you.
Yeah.
That's interesting.
Okay. So, okay, well, where are things going? Basically, I have not generated my new equity curve for 2022 yet. However, we are projecting, here's where we were last week with regarding the active trend trading system. And then basically we have, we're still sitting about break even for the year so far, but clearly the markets are running to the downside. And so while we're just sitting tight, the system worked as the system was supposed to do, was basically move us out of cash, or correction, out of positions that we're losing. We took some very small hits. What are some of the other things that, we did, and this is one of the tips that I do when the market is bottoming or when I'm waiting, is if I'm going to be in a position, I only take a half position size. As soon as the Investor Business Daily goes to market uptrend under pressure, I basically limit my buys to 0.5% on good setups. Secondly, I tighten up my trailing stops on profitable positions. And then last but not least, number 3 is I look to trade things like inverse ETFs. Steve was saying he doesn't like, he basically doesn't trade to the downside very well. Neither do I, but I flip it on its head and I trade the inverse ETFs because when the market's going down, the inverse ETFs index wise is going up. So I'm actually trading in a bullish direction. So it helps with my eye. So there's a great tip for you. So let's go ahead and just take a look at what the heck is going on with this crazy, crazy market. And let's start here. And let's see. Let's go over here to let's start over with the S&P. Okay, S&P. As we see, I have gone over on the S&P and done a couple of things. One is I grabbed this price action right here that happened back in the September, October time frame where we came down and hit this new low and then broke out. That is a strong level of support. So I have identified that in the past, so now I can look for it in the future. As we see, price action has continually to move down. And the question, and I don't know if you've seen it or not, but I did post a really short little video on the YouTube channel. One of the new features is, it's called Shorts. I posted a short that talked about how to utilize the Fibonacci time and price extensions to get an idea of where things are going and when they're going to get there. With that said, how did it work out on the S&P? Well, let's blow this up. Well, let's get rid of that arrow first. Let's blow this up just a little bit. And this is one of the ways we utilize this tool. I encourage you to grab this tool and learn how to use both of them. This is the price extension, Fibonacci extension. You go basically, and what I'm interested in is symmetry of move. So I went from this high to this low, back up to this high. And that gives me some trajectories to the downside. The purple line is 100% symmetry with this move down here. As you can see, it fell through that yesterday as it broke on down. Where did it go to? Down to the 200-day moving average and the 1272. Well, the fun part is now grab hold of how did it do on the time basis? And one of the things that I did is I laid this out on Tuesday afternoon for the Qs, and it'll show you what they did. But I used the same high, low, high to figure out the time constraint. And then we pull that back up there. And isn't that quite remarkable that here's the day that it was forecasting of hitting its low, and that was on the or hitting these lows over here, and that was on the 19th. The next day is the 20th. And so within 1 or 2 days, but as you see, it hit it square dab right on the nose, almost made the zero line. But I went through the numbers I'm looking for is the 78% extension and the 100% extension and the 1272 extension. Those are my 3 target areas, expecting to hit them within this window target. As you can see, worked very well, hit and went through yesterday. So well within the parameters of the index. What am I looking at happening right now? I'm looking for a bounce. And so now I can flip this around. I'm just going to throw it to you really quick. Throw it at you really quick. Get rid of that. Now I can utilize the same thing. If this is a good, strong low, where are prices likely to go? Well, again, I can do the same darn thing in reverse order. But this time I want to go from this low here to this high, back down to the low over here. The purple line is my projection of where prices are likely to go. Somewhere, that's the 100% symmetric move from that low to that high. It could slow down, especially in a weak market. It may slow down at the 78% retracement. It may blow through and hit up here. What are some of the things to take in consideration? 1, moving averages are crossing over. Look at this. They're just, looks like they're going to hit about the time they hit into that Fibonacci extension right there. And then the other thing I can say is once I've determined that, when do I expect it to get there? Really quick and dirty. I switch over to the time extension, utilize the same low, high, low. Now that gives me a projection that prices will move up to the 78% retracement. That's 453 as early as the 25th. The middle one is my, wait a second. There's a 20, that's the 20. Yeah, that's the 25th. This one is the, also shows the 25th. Why is that? Okay, that's the 22nd. There's the 25th. And that one there would be, anyway, somewhere around the 25th is when they're going to basically, it looks like they will hit that target area. Again, up here, 78 up to the 1272. So a really great way to, if you're wondering about where things are going, but when they're going to get there, excellent, excellent, excellent tool to utilize. Running rapidly over to the Qs. As you can see, I forecast this earlier in the week. This was my target box. We hit it a day early, and that's fine. But here we hit the 100% extension of this move down here. Where's it going to go? Well, earlier this morning, if you are a habit of watching the positions early or the market early in the morning, this was showing the first 2 hours of the day a beautiful hammer, a reversal hammer, a bullish reversal hammer. However, is it showing that now? No, it's not. So the lesson learned there is be careful what what you're looking for, or be careful when you're evaluating something, because by the end of the day, the candlestick may not be what it started out to be in the very beginning. Remember that. That's one of the things that's very important with that is that the only time a candlestick, if you like to trade candlesticks, the only time a candlestick can really be truly interpreted is after it's finished and completed. So what do we have going on with IWM? IWM also has broken now to the downside. What's our downside projection on IWM? A couple of them you can take here, and I'll just throw on one. And we can basically measure from this high to this low. I can do it either one of two ways. I can basically take the measurement this way, and then I just extend that down, grab it, activate it, bring it down to where that is our downside projections. What else can I do with this? I can basically take and just do a Fibonacci extension on this. I want to go from low to high in this case. So there's my low, there's my high. And you can see with that is my downside target. Look to your left, as you can see. The 172 area corresponds to a past area of where buyers showed up, and there's a level of demand. So that's what I've got. What do you guys think? I mean, I'm not buying this market yet, even though we may get a bounce. I will be looking at shorting this market or doing some kind of bearish trade on any move back up into the moving averages, utilizing that technique that I showed just a few minutes ago.
I like what you showed us. I agree with it completely. And I've been neutral on the market since about Christmas time. I think I've only had one pick in that period of time.
Yeah.
And I think that for me, I try to trade with market environment, and I think the environment is extremely bearish right now. Maybe a little bit late to be going short. I
agree wholeheartedly.
The downside. So I would just be from my perspective, I'm waiting for the market to give me some idea that it's stopped going down or it's holding back. It may pull back and continue lower, but it hasn't done so yet. So I'm in cash pretty much. I'm rarely in cash, but I'm totally in cash right now.
I got it. Anil?
No, looks good. I don't do much Fibonacci, but I'm learning from you, and I think this is a excellent way to approach.
Okay, excellent.
One other thing I do is I look at the Heikin-Ashi chart, and I would like to see a first green Heikin-Ashi to have some hope of turning around.
Okay, and so I do. I'm not that familiar with Heikin-Ashi. I have not used it. I have not studied it a lot, but I know that they are quite predictive normally. The other two things that I do look at, though, gentlemen, is I also look at what is my momentum doing. Here's the daily momentum. Here, the market forecast. I've got a 3-line cluster on my daily market forecast with prices close to, I'd have to go back and do an evaluation. It's probably closing in on, matter of fact, I'll just show you exactly where I would draw in. Where I would draw in some potential support on that, which is that box right there. And as you can see, it has reached down and it is at a support zone where prices took off from before. So down to 190 up to about 197. So it could go down into that area. We've also projected down with the fibs, but I'll be watching the momentum. The momentum has not shifted, but I do have a 3-line cluster here. What's going over on my weekly charts? Still pointing down. And so where I was saying I'm very excited about that on one hand, in that we know that on the weekly charts, once they get buried back down, especially in the TSI, below the negative 42 level, now it can take 1, 2, 3, 4, 5 weeks or more for it to reverse and come up. So my encouragement and other, kind of other tips is when you're looking for a bottom, one, stay patient because it's going to take longer to work out than you would think it would. While you're waiting for a market, 2, practice and rehearse your trades. If you're not a Thinkorswim trader, find Thinkorswim has the on-demand simulator, a great way to practice your trades. But if you're not find a trade simulator that you can utilize and just practice trading. Get the picture in your mind, rehearse the picture in your mind, what it looks like when the market bottoms. And so another way of doing that is go back in time. I would say go to the Qs, go back in time. Here's a weekly chart. Price actions bottom when? 2020, March of 2020. What does that bottom look like? Go back all the way, go back to, where am I at right here? Nope, go back further than that. Go back here. Go back to one of the granddaddies of them all bottoms from 2002. This was after the dot-com bubble burst. And that bear market, what does that bottom look like? And evaluate what your oscillators look like, how they turn back up, and and if you didn't, don't be worried about getting in on that first go here or here, but where did it give you a second go that turned into a big gain? And that's where that's the other thing I would suggest you do. So that's what I've got as tips for this week.
Can I add something, Dennis, in terms of the long-term perspective? We're going into
what is that? Is that?
That's my neighbor's car alarm going off.
Oh, okay. Sorry.
Anyway,
go ahead.
We're at the cusp of a big move, and if the Fed does what it says it's going to do, we're just at the beginning of maybe the next, I would say, 3 to 6 months of an interest rate hike environment.
Right.
Jen, if you look back in time, and we've had multiple interest rate increases.
Right.
The last one was really in 2004. They've all been very good for the market going out again.
Yes.
So it's not as negative as it's feeling right now. I think the market is just discounting what is about to happen, and I think when it bottoms, it's going to be hard to take, but I think it's going to be to take the signals, but it's going to be a very bullish environment.
Well, I agree with you wholeheartedly, Steve, and like you said, many times is you have to trade the chart that's in front of you. The charts will tell us when it's time to get in. My encouragement, though, is don't necessarily. The biggest mistake I see people when it comes to bottoms is they basically don't know how to be patient. They don't know how to wait for the setup. I would say 80% of the time you're going to get a setup where it's a double setup, where like we saw back in 2002, where you have multiple opportunities. This spike bottom here, those are a rarity. I mean, they really are, because when you go back a little bit further, what'd you get? Okay, we had a drop, and watch what's going on with the momentum indicators. And when they that's what I like about TSI, is it will put in patterns of its own and then kick up and do well from there. So great. So Barry asked a question, Dennis, you trade inverse ETFs, indices, sectors, industry, ETFs, all the above. I have a very specific list of ETFs that I trade, Barry. It's called and I call them the leverage ETFs, and there's 7 of them. 3 of them are the indexes, the spiders, IWM, and the Qs. Primarily, I focus on the Qs and the Qs and the Russell. But I keep the spider around just to give me a gauge of what the market's doing. And then 3 or 4 sectors. And that's what we put out with our leveraged ETF AutoPilot trading service that we give we send out timing on that every weekend. And I'd be glad to provide you information about that if you would like to know what that is. So that's again, I will. So Anil? Anything?
Nothing more. I think just it's a learning process here. And the question that comes to my mind is based on your experience, when the market turns around, which sectors are going to turn around this time, you think?
Oh, to be really honest with you, I don't have a clue. What
I would
do,
agree with you, Dennis.
What I do is, no, I agree. I mean, I really don't.
I don't either.
What I like to do is I will pay attention to what sectors stocks are coming onto the IBD 50 every week. And that gives me a clue as to, okay, here's where the sector rotation is coming from. So I pay attention to that. I also pay attention to, as I run through my sorts every week to come up with my Power Rank Elite watch list, what new sectors are coming onto that. And so that's so, like I said, I don't like, I know there's people who do that. If here's the sector that's coming on, I just trust the heck out of the charts. But the charts are going to tell me, and I trust Investor Business Daily to reflect that sector rotation, which it does a pretty good job.
Yeah, and I would agree. I agree completely. I don't predict what's going to happen. I look to see what is happening. And for me, it's the newbies on the IBD 50 list I get particularly interested in.
Yeah.
As they get added to the IBD 50.
Right on. So, hey, I'm going to show you basically 4 stocks here that you may want to keep your eyeball on. Netflix got taken to the woodshed and beat severely. But where's it falling back down to? Back to past support. Where would I look at potentially shorting Netflix? And this is very classic. Now, when I say short, I would mean taking a bearish position utilizing an option. I would not be shorting Netflix itself. I want to make that sure that's clear. Is this whole gap down window here is a level of resistance. Normally, the strongest resistance is about halfway up in that window. I would not short it where it's at. I want to see it form a pattern, which is at the moving average. As the moving averages fall down, I'm looking for a pullback up and then a fall. Similar, it's just basically the back-assward way that I would trade a breakout, where it breaks out. I wait for the pullback. So this, just look at it. It's broken down. I'll wait for the pull up or pull back, depending on how you trade it. A couple of other stocks that are coming up next week. Apple. So next week could be an exciting week. Apple's doing what the market's doing. Yes, it's holding up better than. However, it's below the 50. Oftentimes, that's a big red flag that further downside is going to happen. Earnings 127. Microsoft next week. My wife says I get excited when I talk on the mic because I get excited about the markets and I get loud. So if I get too loud, I apologize, folks. Similar thing on Microsoft. We actually traded Microsoft a little bit up here, but that's purely a topping pattern that it's gone into. Let's see if it holds to 200. If it doesn't, but again, its earnings on the 25th. And then everybody's darling, which I think will be everybody's darling again at some point in the future, is Tesla. So Tesla is, I like Tesla about $900. However, it's got earnings coming up on the 26th. So we'll see what happens with Tesla. Tesla, if earnings do not turn out well, may blow past this level here and go rattling in down here about the 200-day moving average, or even further down to about 780. So, okay, folks, that's what we've got for today. Neil and Steve, anything to finish up on?
I'm going to stay muted. Nothing from me.
Okay.
Nothing much here either.
Okay. Well, then, until next time, thank you, gentlemen. I think we covered a lot of good stuff. Thank you for sharing your insights and your knowledge about how to prep for a bear market or for market bottoms. I will put some links down in the when I send out the email with the video, some links to some of the YouTube videos that I have already gotten up about how to, show how to trade a market bottom. They've got 2 tutorial videos there for that. So Happy New Year. Aloha, trade well and prosper. I will take off the Happy New Year next week. A month of Happy New Year is enough. And as we say here in the islands, mahalo. God bless everybody. We will see you next week. Stephen and Neil, thank you, my friends.
Thank you. Enjoyed it.
See you guys.